7. 7 consecutive quarters. Berkshire Hathaway has now sold Bank of America shares 7 quarters in a row, and most investors are completely asleep at the wheel on this. Here's what's really going on and what you should be thinking about right now. Greg Abel, Warren Buffett's hand-picked successor, appears to have dumped Bank of America shares for the 7th straight quarter. That's not a trim, that's a conviction call. 7 quarters. That's nearly 2 full years of consistent, deliberate selling. This isn't profit-taking, this is an exit strategy. Abel is now running the show. And the first thing the smart money does when new leadership takes over? They show you what they actually believe, through their actions, not their words. Berkshire is also believed to have made significant broader portfolio changes in Q1 2026. The full picture is still coming into focus. But the Bank of America pattern alone is a 5-alarm fire for anyone holding financial sector exposure. If you're holding bank stocks or financial ETFs right now, the most sophisticated capital allocator on the planet is quietly walking out the door. That should stop you cold. Buffett originally built the Bank of America position into a multi-billion-dollar holding. Watching it get systematically unwound quarter after quarter, that's not noise. That's a signal. But here's what nobody is saying about this yet. The mainstream narrative says this is about valuation. But look deeper. 7 consecutive quarters of selling spans multiple rate decisions, multiple earnings cycles, multiple macro environments. Valuation alone doesn't explain that kind of persistence. This could be a structural call on the banking sector itself, on credit risk, on what's coming next in the credit cycle. Berkshire doesn't telegraph, it acts. And right now, it's acting loudly. First, audit your financial sector exposure today. If bank stocks or financial ETFs represent a significant slice of your portfolio, understand exactly what you own and why. Second, track the 13F filings. Berkshire's next mandatory disclosure will reveal the full scope of Q1 2026 changes. That filing is a roadmap. Know when it drops. Read it. Third, think about concentration risk. When the smartest money in the room reduces a position for 7 straight quarters, the question isn't whether to pay attention. The question is whether your portfolio is positioned for what they clearly see coming. 7 quarters. Deliberate, consistent, unmistakable. What do you think this means for your portfolio? Is Berkshire seeing a credit crisis nobody's pricing in yet? Or is this simply the Abel-era cleaning house? Drop it below. Let's get into it. This video is for educational purposes only, not financial advice. Always consult a qualified advisor before making any investment decisions.